In terms of the U.S. marketplace, the sectors that we like on a moving forward basis would be a rotation out of the defensive into the cyclicals. So from the cyclical aspects, we like energy and technology as our favorite sectors. I think the continued growth in the U.S. marketplace as we look at sub 2% economic growth, but positive but slow growth. All the variables are there in terms of the pickup in the U.S. economy and looking at the earnings growth, although slowing, is still looking positive. From an economic standpoint, the engines of growth are there. So if we take a look at the emerging markets, we do think that from a standpoint of looking out on a strategic allocation for the next 3 to 5 years, that compared to developed markets, emerging markets, and in the equities in particular, will offer more opportunity. If we look at single countries that we like within the emerging markets, the sell-off in China has created tremendous valuation. So looking at a relative basis, the price to earnings, price to book, price to cash flow of China looks very, very attractive to us. If we think about China and the sell-off of China, there was a massive sell-off earlier in the year for fear that China was going to have a hard landing. Well, that didn't happen. China will come in at close to 7.5% economic growth, but they're doing it for all the right reasons in terms of slowing their growth. They have structural reform that's going on that's changing China from being an investment-led economy to a consumer-driven economy. So we think structurally they have more sustainability for growth moving forward. So everything that they're doing in terms of changing structurally, the growth rates in China will continue to be higher than most other areas around the world, and we think the valuations just look very, very attractive currently. If we could actually think about Europe and the economy of Europe and carve it in half and take Northern Europe and looking at the recovery that we've seen in Northern Europe, it looks very, very attractive to us. If we look at the PIGS, what's defined as Portugal, Italy, Greece, and Spain in Southern Europe, they're still struggling with a recessionary environment. They need true structural reform and banking reform before they're really back on their feet. But overall, the Eurozone is showing signs of improvement, and I think if we could bifurcate it from Northern Europe to Southern Europe, we would still advocate having some exposure to the developed economies in Northern Europe. I would still avoid the PIGS. We are seeing improvement in Italy and Spain, but we're not seeing much improvement in Portugal and Greece.